Hey everyone, welcome to the KE Report, another daily editorial featuring TG Watkins. And again, we're firing up our cameras so TG can share a number of the charts we're going to look at. The last time we had TG on the show was, in a way, almost an emergency short-term interview where we were covering the DeepSeek news and the market repercussions on the back of that, where a lot of the chip makers hit hard, as well as the energy sector, all of which that we're playing off that narrative of that bullish AI narrative. We've seen a lot of, I guess, the worries dissipate, we could say, with the markets digesting a lot of this bad news and, quite frankly, grinding sideways. I know they're not screaming to all-time highs recently, at least if we look at something like the S&P. However, they're not falling out of bed either. So, TG, your takeaway from the market and its ability to seemingly move on from what was some negative AI news.
I would first say that I think that there is a lot of worry out there. In fact, on Friday, and we can kind of start back from like when we first had the meeting after the DeepSeek news, we kind of looked at that. That got bought back up, and then we had the tariff news, and then that got bought back up, and then the latest thing to get kind of thrown at the market was the Michigan inflation expectation news from Friday. And that kind of took the market down a little bit too. It actually ran me over because I was looking for the market to go just a little bit beyond 6,100, SPX 6,100 on Friday, and it was well on its way until that news came out. And that was exactly the moment that the market went down. So, yeah, I got run over on that one as far as that trade that was going into Friday. But overall, the thing I've been seeing in the videos that I've been making is saying I think the market is actually pretty strong underneath the surface and holding pretty well considering the three big news events that we just had. And that we're going into February, and February is seasonally weak. And they talk about even the end of February being seasonally weak. And I don't know for sure, but I'm kind of wondering if the fact that we had these three major things that came out and the market has pretty much handled them with grace and with strength is I'm wondering if we've actually shaken out more of the February seasonal weakness early, maybe kind of getting it at the end of January and then front loading it for the first part of February. And maybe we kind of move up from there because right now, Friday, the market really just pulled back to the daily 21, which is still very good. And now we're up again on today, Monday. And underneath the surface, I'm looking around at a bunch of names and my account's doing well today. And I'm seeing a bunch of movers. So for whatever the index is doing, I still think that underneath the surface, the market is pretty strong.
Yeah, TG, it's really fascinating that there's been so much thrown at this market, including the seasonality, and yet it's shrugged it all off and bounced back quickly. A lot of sectors even charging higher during the weakness and the volatility, whether it's the tariffs or the DeepSeek. And it's just interesting to see how well things are going with the market breadth widening out into more names. But let's talk about the index. Let's talk about the S&P. I think you have a chart of the S&P we can look at. And let's get some technical levels on how things are looking in the main index that most investors follow.
Yeah, so what you can see here is through the SPX. And what I would like showing you guys is from December was the top of the market as far as this, recent pullback. And as you can see, we had a 7-week pullback from there. And we were in a pretty good channel. You can actually see just how clean this channel was as it was coming down like this and through here. And then finally, we got the breakout, and that was based on CPI. So we had this huge CPI move. We basically came up, we made new highs, just kind of pushed past it. I was very much expecting a pullback after that. And then we kind of got the band-aid ripped off. I thought maybe we'd pull back for 3 days. It took one day because of the DeepSeek news. But look how price perfectly on both the DeepSeek news and the tariff news came down and retested the top side of this trend line. Usually that's a pretty good thing. And then we ran into resistance on the high side. So again, we're kind of contained with these trend lines. And then Friday kind of came back down, but now we're back up again. So I'm looking at this and now I see that we're kind of sideways in a box, and we've really been sideways since December. So we are now going into 2.5 months of the market basically going sideways, which I think is pretty darn good because in my world, I'm looking at the monthly and weekly, and I think we were pretty stretched. We were getting a little overbought going into the end of the year. And so I think this is fine. This is healthy as long as the market doesn't roll over and die. I think that sideways is good because that means that this isn't going to be a runaway train. This isn't like what we saw in 2020. I am seeing strength like we saw in 2020, but we're not getting super crazy. And so I think that I think we have a lot of time to buy. And then let me show you one more thing that I think is interesting. This is going to be IJR. This is the small caps. And what I really want to show you here is on the monthly chart. So This is actually going to be part of my presentation for the Money Show that is coming up February 17th through the 19th. And I'm going to be, I have two positions there that I'm going to be speaking at. And one of the things I'm going to be showing is look at the small caps, because this has kind of been my whole thing for the last few months is I think that the market is broadening out, Shad, as you said, and that we're starting to see the small caps get on board, which means risk on, which means I think that we're going to have we can run for a while with this, because if the small caps are going to start moving, that means the market's in a pretty good place, especially with interest rates coming down. And if you look at the IJR right here, you can see that was the top of 2020, and look at where we're sitting, right on top of the previous high, very similar to what I just showed you guys with that trend line on the SPX, retesting from above a key level support. And as long as this holds and continues to move up, I'm going to continue to be bullish with this market.
So do you think then that this is the catch-up trade? That this is a play where you can look at these sectors that maybe weren't performing super well in the last couple of years, more the names outside of the Mag 7, and play those names as a continued bullish narrative, and in a way almost ignore the Mag 7 names?
Absolutely, absolutely. And you know what? Kind of one thing you said earlier about this, everyone's worried and fear and stuff. Yeah, this is the wall of worry. This is what people out there, they don't think it's going to happen. They keep thinking the market's going to roll over. And I think they're going to be surprised. And then what they're going to do is they're going to come in late in the game and they're going to want to trade this stuff and buy it. And things are going to start running away. We are just now starting to see this stuff warm up, but I don't think a lot of people know it. And I don't think they're in the right spot. And all they're seeing is the Magnificent Seven. And even people around me are talking about the Mag 7, which are weak, or the FANG stocks or the mega caps, they're weak and stuff like this. And it's getting shaky. And I'm like, everything else I see is warming up. And you know what? The big traders, the institutions, they see this too, and they've been planning this for a long time. And a lot of times what will happen is they'll actually start taking money from the mega caps, basically their safe havens that have gone up, a huge amount. Because if you look at something like FNGU, which is the leveraged ETF of the FANG stocks, I mean, something like it has gone up 825% over the last few years. They've made their money. They made their money with Meta and all this stuff. And so when these growth stocks start actually warming up, because this is the kind of environment that I'm seeing, they'll start taking capital from the mega caps and put it into the small caps, because when this environment happens, you can make way more money and way more gains in the small caps than you can in the mega caps, and they just cycle money over there until this environment is over and done with and the bubble pops, and then they cycle back into the safe haven names.
Well, TG, just to that point, maybe we could contrast what's happening with Nvidia, where there's cash flows coming out of it, with something like the space stocks, where a sector that's on the move and a small caps bringing in that investor interest.
Yeah, and once again, if you look here at Nvidia, I have said ever since the DeepSeek thing, I was like, ooh, better be careful. I'm really not sure that NVIDIA is going to have the same glory that it once had. And, I said that for me, it's technically bearish at this point. Now, I understand it's been up sharply the last few days. That's the other thing. It's just bouncing from a very oversold move. So these are just technical levels so far. If it is going to resume its trend to the upside, I know what I'm looking for on the daily and the hourly. But I look at this on the monthly and weekly, and the fact that it has moved so much, so fast in a relatively short amount of time, it really just outran all of its support. And from a technical level, it really actually maybe could benefit from this pullback that we saw. Now, it'll have to prove itself, but I'm looking at this, and the amount of returns that you can make in NVIDIA going forward using just stock is nowhere near the amount of returns that you might be able to make from something like Rocket Lab. Rocket Lab is already up. Oh gosh, here it went from like $5 to $30, so it's already up 557%. But I think that there could be much, much more potential in something like this, because these things are really starting to crank out there, and I'm concerned people aren't familiar with this stuff and don't really look at it. And so that's where I kind of come into the picture. If people want to come check me out and start figuring out these names that we're trading.
TG, you made an interesting comment there that investors are going to continue to rotate into growth stocks, these smaller stocks out of the Mag 7 that you called kind of the safety plays. Is that ever going to change? Investors are always looking for growth, but does that just mean right now they're even more, in a way, bulled up, saying, give me some growth, give me those quick returns?
I think so. I mean, that's exactly what I'm seeing. This is the kind of environment that we've been waiting for ever since they started to raise interest rates. I mean, we knew in 2020 or 2021 that this was unsustainable. and that this thing was going crazy. It was a matter of when was it going to come down. They finally said, okay, inflation's getting crazy. All these NFTs and stuff are getting crazy, meme coins, whatever. And they said, we need to put this genie back in the jar. And so they started to raise interest rates. And that basically popped the bubble for the market and for the small caps. The small caps, if you look here, something like Rocket Lab, this is a pretty good visual. If you see here on the monthly chart, that basically everything was going down in 2021 as far as the small caps go. Some took longer, some took shorter. But you can see that basically from 2022 to 2024 and a little beyond, it was really just going sideways. And that's what I call hibernating. And they were just building a base. But you can see that something like Rocket Lab didn't go to zero. It stopped going down, it found its support, and then the big money just kept it there and waited and waited, waited because they knew at some point, this is always how it goes. This is the cycle about the Fed and interest rates. They got inflation mostly under control. The economy is in a decent place, and they just knew that at some point they're going to start backing off on interest rates. And then the business environment and everything else, the economy is looking okay. And now we have science and technology that's really taken off with AI and rockets and all this other stuff and drones. And now it's a good environment for these things to start really blossoming. And that's exactly what we're seeing. And we're seeing it across the board on a bunch of these small caps out there.
Yeah, it reminds me of the famous market adage, the longer the base, the higher in space. I think that's fitting for Rocket Labs. I'm also thinking of rocket ship emojis here, but
Yep.
it's not limited to just space stocks. I know you follow a wide swath of the small cap stocks and some of them that are moving. Maybe give us a couple other examples of ones on your radar, TG.
Well, since you guys like to talk about commodities and uranium and stuff like that, the commodity itself is struggling a little bit, but I'll point you towards OKLO and look at this mover. I mean, this is massive, and we've been trading it in and out. We've been doing great with it. In fact, I think we're up. I think we're actually the last point we were in it. I think we're now up about 60%. So yeah, we've been doing well on that. And then I see other ones, and again, there's a whole grouping of these names. Look at SMR. We jumped in on this one again on Friday, and we're already up a few points today. I mean, this thing looks fantastic, and you got to remember this thing started from about $5. Also, it's a pretty crazy ride, but it's been following these moving averages, and volume's been coming in, and clearly this sector is doing well. And the whole thing about DeepSeek and do we really need all this electricity if they can do it better and more efficiently? I thought the narrative was still there because even if they don't use it for AI and even if AI gets more efficient, we still as a society need more electricity. And if nuclear is the way to do that, and as until we get more renewables, then so be it. And I still think these things are going to be happening. So I don't think DeepSeek just stopped the whole nuclear idea. And that's why we're still in these things and doing well with them.
Well, we also need to consider that the renewables are under some pressure because Trump really cut off a lot of the funding for solar and wind. But TG, when you look at charts like this, where a stock has gone up 5, 6 times in a relatively short period of time, even under a year for some of these charts, do you wait for this cooling off period? Do you wait for this sideways consolidation to trade? How do you enter a stock like this when some people could say, look, I already missed the majority of potentially the big move higher?
Well, I will tell you that is my job. That is why people come to us and subscribe to us over at Simpler Trading, and me specifically with Moxie, is because if you guys want to be in this and you're like, oh, I don't know how to get in, you buy the top because it's so exciting, all this stuff. This is what we do day in and day out. We look at these charts and we look at them on lower time frames so we can find exactly that moment to get in. And then I also teach you guys how to do this using the tools that we do. So, a little bit plug for what I do, but that's the question of like, man, how do I make sure I get into these things? Because let me show you Carvana here. Because you guys, Corey might be asking me if, okay, maybe we want to get in at Carvana. It was $75. It used to be $10. It went up 7x. How do I know where to get into this thing? And it continued to go up to now $270. So yes, I think that if you look at Carvana, there's still plenty of room to go on a lot of these names because Carvana basically went, yeah, from $10 and now it's 270. Wouldn't you like to get a piece of this? And even if you get in at 70, there is still a place to get in order to capture that. And this is what we talk about in my trading rooms and here at Simpler because we help get you in at these low spots based on everything we talk about and how to find them. So yeah, I think that there's still plenty more room to go because I think Carvana is a great example, and it basically started moving up May of 2023, and here we are, what, February of 2024. So yeah, I think there's still plenty of room on these things.
Yeah, and you've highlighted a lot of times how you look at some of the moving averages for support, and then also your Moxie indicator, just a number of factors coming together where you look for a trampoline move higher. And
Yeah.
a lot of people aren't discussing things in those unique terms, but definitely worth following TG and the advice he gives his subscribers. Let me ask you about a sector that's rolled over a little bit, the quantum stocks. Are there any opportunities to look for support and average back into some of those positions?
I do. In fact, I was trying to trade RGTI the other day. Now, again, we use smaller stops, so I actually got out of this thing last week. It is kind of holding, so I'm kind of figuring out where I want to get on these. But I'm looking at things like IonQ, and for as much as they got wrecked, actually several weeks ago when Jensen of NVIDIA came out and said, "Yeah, quantum computing is still, 15 to 20 years out now." Maybe he was saying that as a competitor, so maybe he wanted to get them wrecked a little bit. Who knows? Because you're telling me also that what Bush or sorry, what's his name? Microsoft.
Bill Gates.
There you go, Bill Gates is one of those. So Bill Gates was talking about maybe it's 3 to 5 years out. Well, 3 to 5 years out isn't that bad, and so maybe this actually is a good thing that they're what they're looking at, and these things are still alive. If we look at IonQ, it really came down to the weekly 21, and it is now holding. So these have not totally collapsed. They got pushed down quite a bit based on the news, but then they got bought back up, and now I kind of look at them as a holding pattern, and so I don't see them as being too terrible. In fact, QBTS is another one that we look at here. And yes, they got really crazy a few months ago. Like they were going vertical. This, from a technical standpoint, is just overdone. They just don't stay up there for too long. But now that it's come down, it's actually found an equilibrium. So they're not going down. They are going sideways after the news came out. And I'm going to view that as probably relatively strong until they start to show me otherwise. So if they start to roll over, yeah, problem. But I'm looking at this as pretty much a bull flag, and I'm waiting for the next opportunity for them to move up, and then we'll jump on board with them.
So then, TG, any sectors out there that haven't started to move, that have built these multi-year bases that you think could be next, just getting off the mat?
Yeah, there are a lot. I've had a lot of people. So in my position as a trader and the leader of the room, I do get a lot of people asking me questions about stuff. And we have seen quite a few names that are like, okay, they're just beginning, or maybe this, or maybe that. And I've actually said, I'm going to give a maybe to a lot of these names because I do think this is the kind of environment where this stuff is going to go up and, rising tide lifts all boats. But there are ones that are better than others. And I'm just trying to think off the top of my head. I'm looking at Stitch Fix. And you can see that this thing has been down and dead for quite some time, but it's also now starting to improve. So maybe it's not going to be a huge winner, but it's at $5. What if it goes to $8? That's still a pretty big move for it, and it is starting to rise. In fact, I mean, it is bordering right on the new all-time highs from this most recent move up. So yeah, I'm thinking that we can still see things move. I mean, even the stuff off the lows are starting to rise. So just pick your vehicles wisely.
Hey, fair enough. Still a very good market out there and digesting all this recent, what could have been quite negative news for the markets and really just trending sideways and a rotation, the continued rotation trade. All the bears were saying the market couldn't hold up with such weak leadership. And now it's holding up with more leadership. It's a market that I think just continues to also show the U.S. dominance right now in terms of data and I guess availability of capital. Again, TG Watkins, Director of Stocks at Simpler Trading, also editor of the Profit Pilot website. Click that link in the show notes to visit the Profit Pilot website. And TG, thanks for doing another video interview with us.
Great. Thanks, guys.